It's Wednesday, the 25th of August, 2021. Welcome to the Fear and Greed Business Headlines, the business news you need in just 5 minutes. I'm Sean Aylmer. And if 5 minutes isn't enough, then find more news and interviews in our longer daily podcast called Fear and Greed. In today's headlines, finally some good news on the COVID front, with the Prime Minister forecasting travel by Christmas as vaccination rates rise. Plus, commodity prices and global equities jump on the back of confidence about the global economy. Shopping mall owner Centre calls rent relief programs for retailers unfair, and a giant US investor buys into electric vehicle charging stations in Australia. Our lead story today, the Prime Minister believes people should be able to travel interstate by Christmas, warning that state leaders needed to understand that shutting borders could do more harm than good. He said targets of 70% or 80% vaccination rates should be hit by then, and under the National Cabinet Plan, borders should reopen. His comments came after there was finally some good news on the COVID front yesterday, with both New South Wales and the ACT reaching milestones of 60% first dose vaccination rates. And there was further good news. Subsidies are finding their ways to business and workers in need. More than 1.6 million people along the East Coast have now received $3.6 billion in government assistance during the current COVID lockdowns, with an extra 240,000 people receiving benefits during the past week. So, that's the good news. However, the outbreak in the ACT grew, with a record 30 new cases reported yesterday. There were 753 new cases in New South Wales, with the majority in the 12 local government area hotspots. At least the number was lower than the previous 3 days. Victoria reported 50 new infections, while Queensland reported 2 new cases. The rollout of vaccinations is now full throttle, and the Prime Minister is preparing the country to open up again. Every day that goes by, more people receive a jab, and we get closer to some type of reduction in restrictions, and eventually, normality. In overseas news, Wall Street continued to rally overnight, with major indices hitting new records. At the moment, investors are looking beyond the current outbreak of COVID and toward a scheduled briefing by Federal Reserve Chair Jerome Powell tomorrow night Australian time. If he suggests monetary policy could tighten sooner than expected, markets could quickly reverse their gains. Chinese stocks have been hammered in recent weeks on the back of moves from Beijing to regulate some sectors, but yesterday the Hang Seng Tech Index jumped more than 7%, with Tencent and Alibaba surging, while retailer JD.com was up nearly 15%. Commodity prices in general have recovered in recent sessions as well, with copper, which is considered an economic barometer, lifting off its 4.5-month lows. Brent crude is up almost 8% in 2 days, and the price of gold has held above $1,800 an ounce. An infectious disease expert, Anthony Fauci, says the COVID-19 pandemic won't end until well into 2022 at the earliest. The advisor to several US presidents said the coming months will remain difficult, with high caseloads and deaths, especially in regions with low vaccination rates. Locally, Prime Minister Scott Morrison said another 650 people have been evacuated from Kabul on flights operated by Australian and New Zealand air forces. Given the Taliban has said it refused to extend the deadline for the withdrawal of foreign troops in Afghanistan, Mr Morrison was working on the basis of getting everyone out by then. That's the end of August. In total, Australian flights have airlifted 1,700 people to safety so far. Scentre Group owns the Australian Westfield shopping centres, and its chief executive Peter Allen said commercial rent relief schemes reimposed in New South Wales and Victoria were bad policy. He said landlords were required to provide rent relief for retailers with turnovers of up to $50 million, but it should be targeted at retailers with much smaller turnover. Mr Allen was front and centre of the debate about rents last year during the worst of COVID, when Premier Investments, which owns Smiggle, Just Jeans and Portmans, refused to pay rent. Centre posted a solid rise in net profit for the 6 months to June, and its share price jumped almost 7% yesterday. The chief executive of Boral, Zlatko Tolochevsky, said the building materials group expected tough times ahead, warning that once lockdowns end, it will take 6 weeks to rebuild capacity. Boral expects profits to be $50 million lower during the current September quarter because of the shutdowns along the East Coast. The Kerry Stokes-controlled Seven Group now owns almost 70% of Boral, and the business will focus on its core Australian operations. And giant US investor BlackRock will invest around $100 million in electric vehicle charging group Jolt Charge, kickstarting a $500 million rollout of 5,000 free charging stations. Jolt's business model combines the use of existing urban electrical infrastructure, such as substations, with outdoor advertising and electric vehicle charging, according to the Financial Review. Motorists get free use of the EV chargers up to a certain limit, with revenue coming from advertising. The initial 1,000 charging stations will be installed in Sydney and Adelaide over the next 3 years, followed by sites in Brisbane, Melbourne and Perth. That's the Fear and Greed business headlines for today. Make sure you hit follow so you get it every morning and search for our longer daily podcast called Fear and Greed. We also release a daily interview. Today we're talking to ANZ Chief Economist Richard Yetsenga about jobs and house prices when we're living with COVID. Don't forget to follow us on LinkedIn, Facebook and Twitter, or go to fearandgreed.com.au. I'll be back later with the afternoon market report. I'm Sean Aylmer. Enjoy your day.